Quint.
Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. Markets are off today's high but remain at record levels. The Nifty trades above the 11,700 mark. Financial stocks are the top laggards. IDBI Bank will make a preferential issue not exceeding 14.9% of post-issue to LIC. Fertilizer stocks are in focus after news reports talk about a weekly subsidy mechanism. Companies tell Bloomberg Quint that such a system is already in place. Jet Airways posts a loss for the second straight quarter, driven by high fuel prices and forex loss. The stock, however, is gaining in trade today. And Indian shuttler PV Sindhu becomes the first Indian to win a silver medal in badminton at the 18th Asian Games in Jakarta.
Well, so that's the long and short of all the news headlines at this hour. Thanks for tuning in to Countdown, viewers. My name is Neeraj Shah, and the markets doing okay for themselves, about 1/3%. We've been in and around this mark for a better part of the day, and the Nifty Bank has been down about 1/4% for the better part of the day as well. Started off marginally higher, but since then it's been a flat day for the Nifty Bank too in the session today. Mid caps and the small caps, obviously not as gung-ho as they have been in the past couple of days, and even yesterday, remember, they were underperforming. But in today's session, while the small cap index is up about 0.5%, the mid caps certainly down in trade. The market breadth should come up on your screen and just show you what the advanced decline ratio is looking like. Almost even Stevens, maybe a little bit of edge to the decliners, but it's almost even Stevens currently. Let's pull up the Nifty heat map and try and show you what's moving and what's not. Yes Bank at about 1 p.m. was the top loser, and likely that that stock still will be down in trade, 3.5% down. GAIL, HPCL, so oil and gas under a bit of a cloud. SBI brings up the list of banking stocks which are putting pressure on the Nifty Bank. Conversely, I think Kotak Bank has had a reasonably interesting session in the last 2 or 3 sessions. It may not be amongst the top performing stocks, but right up here, about 1% higher. Reliance, the big boy, up another 2% in trade. Hindalco, Vedanta up about a couple of percentage points as well. And some bit of gains for a stock like Maruti Suzuki, which I'm seeing is about 1.5% higher in the session today. But more decliners than advances, despite the fact that the index is up about 1/4% or 1/3%, in part due to the kind of moves that stock like Reliance is making. However, just a couple of pockets of strength and key trenders that I want to highlight before I hand it over to Navneet for what's happening in the more liquid universe. So, fertilizer stocks, all of them up in trade. We'll though tell you about why some of this news was already known to the market or already known in business circles. Even though the markets are rewarding these stocks right now, 9% up for a Chambal, about a 14% up for a Fact as well. Citi expects an 85% upside to J Kumar Infra, and on back of that note today, J Kumar Infra is up about 9.5% in trade. It is a good move for this stock in trade. And last but not the least, stocks that have gone off in the session today, amongst others, include a VIP. The commentary from the management fairly strong. They spoke to us, and we'll make you hear a slice of that conversation. But after a really good rally for a really long time now, some bit of profit booking has crept into VIP in the session. But Navneet, what about the more liquid universe?
Well, they're good going, at least for the benchmark indices. We did touch fresh highs in the opening session. Nifty is still trading above the mark of 11,700. I think it's the bank Nifty where some bit of profit booking has come in. So the rollovers from yesterday's 23% for Nifty is currently somewhere about 29%. Pull up the bank Nifty rollovers too, where yesterday's closing was about 19%. Let's check if there is any more build-up which has taken place throughout the session today. And bank Nifty is at 25%. In fact, for the August series also we are seeing some bit of OI addition of nearly 10%, but clearly some of the banking stocks are under pressure from the likes of Yes Bank, which is your top nifty loser as well. In terms of options data, well, the base for this market is moving higher and pretty much clear now, because if you look at the maximum open interest on the call side, which until yesterday was 11,700, has moved to 11,800 after index surpassed and has traded full day above that mark. So that's a very positive sign. In fact, unwinding continues for a lot of call strikes today, 11,600, 11,700, telling you that the call writers have been running for cover right since yesterday. In terms of put side, a lot of addition has once again, in fact, for the second straight day, has come in for strikes like 11,700. Last when I checked, almost over 22 lakh shares were added for this strike. So let's see if the expiry takes place above the 11,700 mark. But definitely, if one were to go by the option queues, it looks like it may just happen above that mark. For the September series, if you're watching out for a range, so far 11,600 call is sitting with maximum open interest and the 11,000 put. It's pretty wide right now, so I think we should wait out for 2 to 3 more days to get better clarity. In terms of stock futures, watch out for Equitas Holding. That's your top F&O gainer, gone up on very high volumes on the cash side. In fact, we've seen some fresh long positions also coming on the future side, so the cues for this one look good. That's the AVAT function telling you the projected volumes for today vis-a-vis the average volumes of last 20 days. Also watch out for some divergent moves in two tire makers, where Balkrishna Industries is trading very close to its all-time high levels. It's up 4%. Fresh long positions have been seen. On the other side, you've got something like Apollo Tires, which is under pressure, and that one is seeing fresh short positions in today's trade. Okay, and that's about the futures and options market. That's what we are witnessing. Let's see, just few more days to go for the expiry, but clearly some good gains clearly seen in today's trading session. Well, Neeraj, pardon me, was talking about the fertilizer stocks, how they've been going up. They've been surging after news reports suggested that subsidy from the government will be paid on weekly basis instead of waiting in the works for months. Companies, however, told Bloomberg Quinn that such a mechanism is already in place over the last few months. Let's get more clarity as to what sort of more details Yash Upadhyay has gathered with his interaction with some of the management. Yash, over to you.
Well, thanks for that, Navneet. So essentially, the fertilizer stocks, they are moving on the back of news that the fertilizer subsidy payments would be streamlined and would start being dispersed on a weekly basis instead of taking months. Now, that is something which, however, in our interactions with the management seems to suggest that is already in practice over the last couple of months, say over the next 2 to 3 months. So what we did is we caught up with Abhay Bejal. He is the CFO of Chambal Fertilizers, and he told us that once the DBT plan rolled out on a pan-India basis in April, the things weren't as smooth as they were expected to be. There were issues with respect to software, and there were multiple attempts being made to do the payment with the point-on-sale devices. But however, with time, the system has become more streamlined, and over the last 2 to 3 months, the subsidy payments, they have been started being received on a weekly basis. Earlier, it was with a lag. It was at 15 days, and prior to that, it was about a month. So that is something which the Chambal Fertilizer has told us. Also, we spoke up with Zuari Agro's managing director, Mr. Krishnan, and he too had told us the same thing, that basically this is something which has been in practice once the system became more streamlined. Just to give you a better understanding of what the direct benefit transfer is, so basically it is a subsidy mechanism which the government has approved, wherein they would give the subsidy to the fertilizer company directly instead of the beneficiary, based on the actual sales recorded on the point-on-sale devices by the retailer, which is linked to the Aadhaar card of the beneficiary. And well, it was rolled out in a phased manner from October of last year and it was rolled out on a pan-India basis from April.
Okay, so this is the important bit. I know that Yash, thanks for putting this into perspective really, and Yash called up managements and spoke to them as well before doing this. The important bit is that everybody believes that the 7-day release mechanism will come into effect at some point of time in the future, and that's beneficial. Beneficial as it may be, it's already into effect a couple of months ago, and that's the key thing. But the stocks are active. Let's see, they last for a while. Really doubt this can continue based on this particular piece of news. Benefits to the business, sure enough, that may merit more attention too. However, the big news is what was flashing on your screen just a while back. the LIC board has approved subscription to IDBI Bank. The catch here is that the life insurance stake will not exceed 15% post the issue. Now, Sajid Bangat is here with the details. Sajid, this is very interesting. And one, I would like to draw reference to the story that we had put out. But two, what is also the general popular belief in media by and large about the quantum at which can go to and the pricing at which can come at. Now, how does this shape up against all of those expectations?
So let's put a, give a perspective to the entire thing.
Yes.
IDBI needed roughly around 10 to 12,000 crores to recapitalize. And the talks were that LIC would be coming in and taking up a stake, as a result of which LIC would get a majority stake. There were also discussions whether LIC will go beyond 51% or not. In case if that happens, LIC becomes a promoter of IDBI Bank, like it was for Corporation Bank, and so in doing so, the government stake will gradually come down, and over a period of time, maybe 10 years or so, LIC will bring down its stake in IDBI Bank. That was the assumptions, or what was coming in from various sources, including regulators and North Block. It was there. Now what has happened is that the board of LIC has capped the investment into IDBI Bank to 14.9% at any given point in time. That means that LIC will subscribe. LIC currently has roughly around 8% stake of the total 14% public stake which is there. LIC can take its stake from 8% to 14.9%. It has to maintain at 14.9%. So if IDBI tomorrow goes and raises further capital, LIC can pitch in more and ensure that its stake remains at 14.9%.
Can I just ask a question?
Yeah.
I think IRDA rules suggest that insurance companies cannot own more than 15%. And to counter that, I think they had taken permission from IRDA.
There was a permission which came in from IRDA.
Cabinet too.
And then it went to the cabinet as well. And the cabinet had recommended to the IDBI board, because the proposal, because the government is the promoter of IDBI Bank. So it has, asked LIC.
Special permission was given to LIC.
The cabinet, special permission was given to LIC. We don't know why it got restricted to 15%. What are the reasons for that at this point in time? But the fact is that at current juncture, if LIC were to increase stake from 8% to 14.9%, the total kind of infusion that's going to come in is around 2,000 crores, not more than that. It was stated to be 10 to 13,000 crores. Only 2,000 crores comes in. It gets less than 15% stake, which is well under the mandated thing of IRDA, and it also means that LIC is not a promoter, or it's a strategic it becomes a strategic investor in some form there, but not a promoter, and there is no open offer which is going to come in.
That's the interesting bit, isn't it, Sajid and Naveen? One, that they don't have to make an open offer. Forget asking for the exemption of the open offer, because that was doing the rounds. Then they asked SEBI for the open offer exemption, and whether or not that comes about. The pricing now immaterial, right, from a minority investor shareholder's perspective, because irrespective of what the stake price would be or whatever it is, the minority shareholder's life doesn't get impacted one way or the other.
That's true. Minority was anyways going to come down to a very significant small amount when the entire deal was supposed to happen. And it was LIC who was supposed to increase its public float as it dilutes its stake. Okay. So I think Ira
has more updates. She's spoken to the IDBI Bank CEO and is joining us on the conversation as well. Ira, what are you learning?
I've spoken to officials within the bank, and what we have picked up is that the reason for doing this in such a way is that up to 15%, as we all know, LIC is allowed to pick up equity in a bank or any other company under the provisions of the IRDA Act. So what they have decided is to go ahead and at least do that 15% stake acquisition for now. The people we spoke to have clarified that this does not mean any change in the original plan of holding 51%. LIC still intends to hold up to 51% 15% in IDBI Bank, which would then mean control, management control, a possible promoter change as well, all as per plan or what the LIC and the government had agreed upon. What they are doing is that they're doing this in tranches, because up to 15% there is no regulatory issue. So they are doing that. That will mean an infusion which Sajid would have detailed out for you, which will come through directly into IDBI Bank just on account of this 15%. The remaining will need a number of regulatory approvals which have not come through yet. These regulatory approvals, of course, range from RDS, CCI, but most importantly the RBI. Only once all those approvals come through will they be able to go beyond that 15%. When we asked whether this would take months, they said we're not clear on what the timeline would be, which is why it was decided that you would first go ahead with the 15% which is currently allowed, so that the bank can get the capital that they need, and then subsequently go ahead and increase it to 51%. So just clarifying, no change in plan from LIC. They still intend to hold up to 51%. No adverse regulatory opinion so far. That is what the officials we spoke to have actually told us, and added that this will then happen over a period of time. For now, 15% allowed is being done, and that would mean an immediate capital infusion or whatever the amount calculated would be.
Yeah, just one question, and might be hypothesis, but the earlier belief that almost everybody had was that this will get concluded in 2 months. Would it be a safe guess that because the timelines will not be known right now, might be extended or more than 2 months, that's by step one, get 15% done and then wait for the other approvals to come into place?
It looks like that, but I won't speculate on the timeline.
Okay, fair call. Ida, thanks for putting that into perspective. Sajid? So, that changes the scenario a little bit, because this is the first step and not really the final step.
So in the meantime, if IDBI is to raise funds from the capital market, LIC can technically maintain its stake at 14.9%, which is there. So, it says that at all, not 14.9% and at all times. So that means to maintain 14.9%, it can bring in more infusion of capital. Now, whether it goes to, because it has technically it has an approval to go up to 51%. Now, when that happens, they will have to be some regulatory changes, including changes in the article of association, which requires government's mandated 51% stake in IDBI to be reduced. Now that's a mere formality, because it can be done through a postal ballot as well, which takes around 30 days or something. So that could be one trigger. As soon as IDBI comes out with that trigger of amending the article of association, it means that all approvals have come in. Now they're going ahead, so that government can come down from the promotership from being a promoter of the bank, and LIC can come in as a subsequent investor.
RBI approval, I think that's the key thing now that both the parties will be waiting for. But
there are many approvals, not just RBI, but we don't know exactly where it is stuck, because if the cabinet has approved and the North Block has approved, so we don't know where exactly it is stuck. So in the immediate, yes, 15% would be the immediate one, because
that's just an interim relief
which IDBI gets for capital.
So some capital infusion they'll get now.
So 2,000 crores of capital, as per our estimate, they'll get immediately 2,000 crores. The remaining can come in tranches or
as and when they get approval from all the respected parties. Okay, thanks a lot, Sajid, for joining us and giving us all that clarity, or rather the development emerging out of LIC and IDBI Bank. Just to alert our viewers, IDBI Bank was looking to become the promoter of LIC was looking to become a promoter of IDBI Bank. They currently hold somewhere about 7.5% to 8%. So as of now, they will be increasing their stake to 14.9%, which is a mandate by the insurance regulator, IRDAI, as they await more approvals to come in from various different parties. And obviously, one of them will be Reserve Bank of India. And the original plan is still intact, is what we are gathering from our sources as well, where IDBI Bank, where LIC finally would be looking to pick up almost 51% stake in the company, Neeraj.
Well, that's the long and short of this story, but the important clarification, this is, well, the first step and not the final step. Okay, let's move on. Remember, we've been talking about rising pellet prices. Now, Edelweiss has come out with a report on the rising pellet prices. These have pushed up prices of longs across the value chain. Let's discuss this in detail with Amit Dixit. He's research analyst at Edelweiss and joins us right now on the show. Amit, so good having you. Thanks so much for taking the time out. What's the crux of this note? One, what's the extent at which this price movement can shape up to over the course of the next, say, quarter? and what impact would this have on the sectors? Because we've already seen some price action, I think, from metal companies.
Sure, great. You know, we have been pushing ferrous story throughout. That is, you know, ferrous at the expense of non-ferrous. Am I audible?
Yes.
Loud and clear.
Sure. So yeah, so we have been pushing this, you know, ferrous idea. We have our distinct preference for ferrous vis-a-vis non-ferrous, particularly because of the fact that Chinese production cuts and winter shutdowns are impending. Now, you know, on demand side, while that had held good, now in the recent times, what has happened, the Samarco pelletization plant is not yet operational, and to add fuel to the fire, we had LKABs declaring force majeure on its northern region supplies. So together you have around 58 to 50 to 60 million tons per annum capacity of pellets in the world. I mean, and these guys are essentially third-party suppliers in disarray. So this caused actually pellet prices to move up. If you might recall, pellet prices were like at around 6,700 per ton level. I am talking about Raipur pellet prices in January, fell all the way to 5,800, even 5,600 in mid of June. And now they are back again at around 8,500, which is incidentally a 3.5-year high. So the key drivers are both on demand side as well as supply side. On demand, we have, you know, Chinese mills trying to procure as much as the so-called quality iron ore, which is lumps or pellets, as much as possible, just to escape environmental restrictions or to kind of have a mellowed down impact. And now you have supply side also holding forte. So the second part of your question, that whether how much do we expect it to benefit, you know, so I would say that typically the guys who have got their own iron ore mines, let us say KIOCL, NMDC to an extent, because NMDC has recently commissioned its pellet plant, and then Godavari Power and Ispat, of course, these guys have got their own iron ore mines, so these guys would be the key beneficiaries. Next in the rung are the guys like JSPL and all who have partially captive iron ore base. So, you know, pellet price, which was like around 6,070 odd rupees in Q1. If you take average for Q2, it is 6,780. So already we have 1.5 months to go. And I do expect that with winter shutdowns looming large and Samarco not showing any signs of getting resolved, at least in this financial year, so iron ore prices and thereby pellet prices should remain high. And therefore, you know, longs prices, which had taken a little bit of hit in monsoon quarter, if you look at flat prices, they have not fallen apparently, but long prices did fell quite a bit. When I say quite a bit, they did fell around, you know, 8 to 10% from their peak in Q1. So we have seen them slowly crawling back, and this bodes well for longs players in the country.
Amit, you mentioned steel makers who are partially captive in terms of pellet, they could benefit, but could you give us more clarity on which are those steel companies which are fully dependent on the market to buy pellet, because that'll also mean prices going up would increase their raw material prices, and we know because if the raw material goes up, steel prices would also remain at elevated levels going ahead.
Yeah, exactly. So this is the kind of, you know, push that we have seen. So if you look at, you know, there are players such as JSW, they have got their own pellet plant, but, you know, we all know they depend on third-party guys for supplies. Similarly, JSPL, they have got their own pelletization plant, but they are also dependent on, you know, for most of the iron ore requirements, they are dependent on outside parties. So these are the two primary steel makers that come to my mind, to be honest. And they will get benefited because, you know, JSW, of course, because flat prices are on a roll, and now longs prices have also joined the party, and we have seen this cost push impact happening right across the value chain, as we have covered. If you look at DRI, whether you look at billet, whether you look at rebar, it is evident almost everywhere, all across the value chain.
So, you know, there are multiple factors now which come out, Amit, and support the steel prices too, right? China's production cuts were probably a factor. Now this cost push is a factor too. What's the outlook for the rest of the year?
Well, that's a difficult question, to be honest, because, you know, things change so dramatically and quickly in the commodities space. But yeah, I would make an attempt to answer a question more directly. So as I see it, you know, let us see in context of India, where Q2 is supposed to be a seasonally weak quarter. Now, if in seasonally weak quarter you see steel prices rebounding, then when Q3 and Q4 will... Hello?
Can hear you. When Q3 and Q4 come in, what would happen?
Yeah, so when Q3 and Q4 will come in, which are seasonally strong in terms of demand, that is one factor. The second factor you have, of course, that Chinese winter shutdowns will get intensified. Even some municipalities, some cities such as Tangshan, they have been even advanced to September. So with these coming to fore, I believe that steel prices should remain stable. If not, an increase, but they should remain stable. And therefore, we have also seen iron ore players. If you look at NMDC, they increased their prices by 150 rupees a ton quite recently, followed by Odisha miners also increasing their price by 300 rupees a ton. So in this scenario, when raw material prices are going up and people are able to pass them on, guys like Tata Steel stand out from the rest just because of the captive base they have in India. Even JSW for that matter, the reason being their conversion cost is quite low. So all in all, I believe it's going to be a very good FY19 for steel makers across the country.
Amit, because of all these factors where pellet prices are now almost at 4-year high, do you also think, keeping in mind rupee depreciation, it is the exporters who will stand to gain the most, companies like Godavari Ispat?
Well, that's true. Exporters would gain to the extent of currency depreciation. That's correct. But also one more factor that has to be kept in mind, that depreciating currency also makes imports, the import parity increases essentially. So therefore, there is more headroom for people to increase prices in the country. So yeah, answering your question directly, pellet exporters would definitely benefit because of depreciated rupee. But so also the other guys, because the import parity plays a role over here.
So which are the top picks of Edelweiss, keeping in mind the price action that one has seen globally for pellet prices?
Yeah, so we have, pellet prices is a small part to it, I would say. Our top picks in ferrous space remain Tata Steel and JSW.
Okay, we'll leave it at that. Amit, thank you so much for taking the time out and giving us a synopsis of this note that you've written as well. Great having you today.
Thank you.
That's the view from Edelweiss Securities on, the metal space and the pellet producers as well. In the note, they mention that pellet producers, exporters such as JSPL, Godavari Power and Ispat and Jindal SAW will benefit too. But their top ideas remain Tata Steel, JSW Steel and JSPL. So those are the pockets that they believe will benefit. Okay, that's not all. Just quickly bring up what the markets are up to. We've cooled down a little bit from where we were trading at, and I believe the banks would be a principal culprit there because the Nifty Bank is down about 1/3%. So just keep that at the back of your mind. The list of 52-week high stocks though remains very, very strong. Something's happening with the Adani Group and that entire basket of stocks. Adani Enterprises up 7%. Adani Transmission, I remember, was up about 13-14%. Adani Power is up about 5% in trade. There's something happening out there in this pocket, which is quite interesting. Let's talk about all of that with Gurmeet Chadha. He joins in right now with his thoughts as well on the markets and on specific pockets of strength / weakness today. There is some weakness too in select names. Gurmeet, good having you. Thanks so much for joining in. We'll get in the index comments from our technical experts too. But Gurmeet, what are you doing right now? What are you telling clients to do? Put in fresh money to work or take some chips off the table with the markets nudging new highs almost every single day?
Neeraj, not taking chips off the table. I think obviously there is a word of caution because of the narrowness in the rally. In fact, I was looking at a data today that Reliance is last 1 year has probably contributed 700 points on the Nifty. In the top 100 stocks by market cap, close to 60 stocks are still near their 1 year low. So it's not a broad-based rally, and we saw that SEBI report which came up day before, talking of top 40 stocks is where FIIs and MFs have almost 75% of their holdings. So I think but I agree with you. The valuations look stretched. We are 20 times forward on earnings, 2.7, 2.8 times on price book value, which is more than the long-term average. So So the incremental returns could be possibly high single digit or early double digits. But there are pockets of opportunity. So, patient portfolio investing would help.
Okay, and we'll talk about the patient portfolio investing and talk about other pockets as well. Gurmeet, stay on. Let's first get in some trading ideas going from our technical experts. Amar Singh of Angel Broking joins us on the show, as does Sacchitanand Uttekar of, I'm told, okay, yes, Sacchitanand Uttekar of Tradebulls also with us. Gentlemen, both of you, good afternoon. Thanks so much for joining in. Amar, let's start off with you. How are you approaching trade today? Because there is diverse movement in the Nifty versus the Nifty Bank, which is unlike what we've seen the last couple of days. So what's the trade until expiry on the indices?
Yeah, I would say that Nifty definitely, if we compare both Nifty and Bank Nifty is anytime stronger technically also with regard to Bank Nifty. So I would say that, and we've been on the buy side in Nifty. So I would still say that the overall trend definitely remains positive and strong. But we are seeing some, I would say, signs of slowdown of the trend or the strength. So I would say that one needs to be slightly cautious, but still any pullback towards 11,700, 710, that can be used as a buying opportunity for Nifty August futures with a stop loss of 11,665 and a target of 11,805 on the upside. What one needs to really understand here is that since the markets are trading at record levels and we are also seeing up gaps and down gaps on many occasions, so one needs to trade cautiously at these levels.
Okay, so trade cautiously at these higher levels, but largely the view remains that momentum is on the upside. Sacchitanand, what about you? Are you taking any fresh trades right now? Are you booking out profits if you had any long positions in Nifty?
Well, good afternoon. In fact, on the Nifty, we have been more on the cautious side, and we have really not committed on the long side in the last 100-130 points of the uptick that we have seen. If you look at the primary reason, we have been talking about a negative divergence, getting highlighted on the daily scale of the RSI, and this is why we are, opting out from creating any fresh long positions as far as the index is concerned. But definitely, the market has been very much divided. We also have certain stock-specific action on the positive side. But as of now, I think again the stocks that we are discussing are more on the short side. So if you look at Indigo, we have seen good amount of consolidation within the price action throughout this particular expiry. If you look at the daily chart itself, we are seeing a small broadening formation with a base somewhere close to 995 now. Right now, what we are seeing is that there are some additional short positions which are getting rolled, and I think a fresh short can be initiated even right now. A stop loss can be placed at 1048.30 and a target of around 995 can be expected in next couple of trading sessions. Second call is again on the short side. This is PNB. Primarily this particular stock has been an underperformer. Recently, the headwind at around 85-86 levels has been really strong, and the stock has not really been sustaining above those levels. Again, we have an engulfing bullish kind of a pattern which occurred in today's session, and I think the market, the stock is getting ready to tilt down towards say sub 74 levels. But on a trading perspective, I think 78 could be an immediate target for this particular stock. Short positions can be initiated with a stop loss close to 84.90.
Okay, Amar, what about your stock recommendations?
Yeah, among the stock recommendations, the first one is Bata. I had spoken about that yesterday as well, and if you look at Bata witnessed some consolidation, and then it dipped towards 1055, 1060 levels, and from there it has bounced back. Technically, if I look at the charts, Bata continues to be extremely strong on the charts. Yes, it is in overbought territory for quite long, and it is looking overheated, but still I would recommend that any dip can be used as a buying opportunity. So one can look at Bata around 1070-75. That can be a good level to buy with a stop loss of 1054 and a target of 1110 on the upside. The second stock to look at is Hindustan Petro. What we are seeing here is that this stock is on a gradual slide. It did bounce back, but then again the trend changed, and from 300 levels the stock is down to 255, 56. So technically this stock is in a downtrend, So any pullback in this stock can be used as a shorting opportunity. So any pullback towards 259, 260, that can be a good level to short with a stop loss of 265 and a target of 249. And the third and final stock is Torrent Power. What we're seeing in Torrent Power is that this stock technically is strong on the charts and it has witnessed a breakout. Because if you look at the stock was unable to breach the 240-45 mark and it continues to be strong on the charts technically. So one can look at buying Torrent Power. Any dip towards 260 levels can be used to initiate a long position with a stop loss of 254 and a target of 273 in the short term.
Okay, those are some trading bets coming in from our technical experts, and one group which is doing pretty well, Adani Enterprises, has touched its 52-week high. It's currently a top F&O gainer as well. The stock's up 6.5%, almost at day's high. Neeraj mentioned about Adani Transmission. Remember, that was locked in upper circuit with gains of 20% yesterday, and the buying momentum for Adani Transmission continues once again in today's trade, up almost 17%, and it's not stopping there. Even Adani Power is up and about, up almost 5% right now. So let's check what Adani Ports is doing. Since all the stocks are up and about, Adani Ports not doing too much. It's just about flattish in trade. Hi Gurmeet, good afternoon. This is Navneet. You were talking about some opportunities in this market. If you could tell us which are the pockets where you see at current levels, current valuations too, it makes sense to put money.
Yeah, hi Navneet. So as I said, been talking about consumption for some time now, and seeing earnings with multi-year growth is what we track, and we don't necessarily get swayed by a high P or a high price to book value. And we've seen the case. We've seen people being circumspect on Page Industries at 20,000 levels. We've seen people circumspect on Bajaj Finance at 1,600-1,800 levels. So I think I can name enough of them. See, what is important is that is the pie going to increase or not, and that is what I think the long-term investors are looking at. So one area I'm positive on is one stock which I'm very positive on is Pidilite. I think the adhesive business continues to do well. The sealants, which basically they have, which is Fevikwik and M-Seal, again growing healthy double-digit. Construction chemicals, which is your waterproofing, tiling, flooring, stuff. I think has a huge potential to probably expand and grow 3x, 4x, 5x, because this is a segment which will expand the market of construction. So positive on them, and overall positive on housing, material, paints, because I'm seeing structural changes. Look at paints, for example. We have discussed this earlier. Just the branded decorative paint industry is just about 40,000 crores, of which Asian Paints is 65%. And you have price points across. They have lower brands like Utsav at lower price points, Royal at higher price points, and we've seen the painting cycles getting shortened. We've seen conversion from lime wash. So a lot of structural drivers, and I think the pie will expand. So if you can grow 20% year on year, the market will continue to give you a premium.
Well, talking about paints, you've got Berger Paints, which is trading at live highs in today's session. That stock's seen gains of almost 3.5% right now. Amar, if I could take your view on the charts for Berger Paints, how is this? I'm sure it's looking good in the charts considering it's trading at all-time high levels. But if somebody's taken long positions, what's the target they should watch out for?
Yeah, overall, looking at Berger Paints, definitely the trend continues to be extremely strong on the charts. They did witness some consolidation for the last couple of days, and I would say that it was finding resistance around 330 levels. So that has been taken out. So I would say that there is still upside towards 348, 350 levels. So one can look at ideally booking profits around those levels.
Okay. The stocks which are active today, I was just looking at the Nifty 500 and the gainers. So while the Adani Group stocks are one, J. Kumar Infra was up 10% or is up 10% on the back of a city note. We'll get in Nikki Mirchandani really to talk about it. But just look at that move here. J. Kumar Infra is up about 10%. Reddington is up about 9.5%. Vinati Organics 7.5% after a brief hiatus. And I think a couple of block deals that have happened. One of them has happened in Welspun India, which is up 5%. The other one has happened in Equitas Holdings, up about 6.5%. Two large block deals, both stocks moving around in the session today. Let's first talk about these blocks. Gurmeet, any thoughts? Chalk and cheese, the business is really not comparing them, but two companies on which there have been two bulk deals. One of them is Equitas, the other one is Welspun India.
Yeah, so here I think we're seeing sector rotation. I think if you see, last year was all private banks, auto. We started the year with FMCG, IT, and with L&T, announcing a buyback. We are seeing capital goods, infra coming back. Also worries me because when you rotate sectors, and we see pharma going up. If you globally also see the Vanguard Health Index, Health ETF up and outperforming. I think that's probably a sign of market running out of legs. Commenting on specific, I think on Equitas, I think it was long due. I think it's been a relative underperformer. I think I'm more positive. I mean, we've had that numerous discussion. I'm extremely positive on some of these, smarter NBFCs come on-tap banking license entities. As I see a huge credit boom coming up. Look at the savings pattern today, the way it has undergone a change in last 5 years. I mean, we were saving 27, 28%. We are down to almost 19, 20%. And you have a credit-induced consumption story. The lending is becoming more and more commoditized, more and more digital, and the pie just keeps on expanding. One idea I like in this space is the parent company, which is the Bajaj Finserv, not as much Equitas and the Welspun you can discuss later. The LI and the GI business of Bajaj Finserv, the Allianz had a call option to increase stake. That has expired. And then, so that which means that the stake would happen now at a market price, which I think can give a very good near-term, upside to Bajaj Finserv.
Well, it's doing rather well for itself. And while we're on the topic, before we get into J. Kumar Infra, you mentioned Welspun India. I mean, I asked you about Welspun India. What are your thoughts here?
I haven't tracked years, to be honest. Welspun of late. I've been too busy with my consumption basket.
Okay, can understand. Well, I think everybody's been too busy with their own pockets to even look at J. Kumar Infra too closely. But Citi did, and Citi initiated coverage on that company today, calling it a premium play on the urban infrastructure space. Let's first get in Nikki Merchandani, who's scanned that report. He has to tell us what is the rationale that Citi has behind this report. Nikki.
Sure, it's initiated a buy rating on this counter with a target price of around 460, which indicates a potential upside of more than 85% for this counter. It says that the company is a play on India's urban infra opportunity and is one of the top picks that the brokerage has in E&C pick. Also, if you look at the backward integration, that is expected to lead to sector high margins for the company. Currently, the PBT margins of the company are higher as compared to rest of the industry average, at least in the last 5 years that we've noticed. Also, if you look at the backlog, that's almost 3.6 times its sales, which provides a strong sales visibility for this company. And as you just mentioned, Neeraj, about the premium valuation, currently sits at a PE, FY19 1-year forward PE of around 16 times, which is 20% premium as compared to the whole industry. But then that is well deserved, according to the brokerage, given the strong order backlog, earning visibility, and the faster earning growth that the company has registered. In terms of risk, project concentration and asset heavy and high fixed costs are the key risks that the brokerage is witnessing over this company. Also, the spillover impact of blacklisting by a local municipal corporation and shell company allegation also termed as a risk for this company.
Okay, Nikki, thanks a lot for bringing in all those details. And clearly, we've seen some good moves post that brokerage report has also come out with regard to J. Kumar. The stock is up almost closer to 10% in trade. Gurmeet, you were talking about you're busy with the consumption basket in your portfolio. I just wanted to check which is the top weighted stock.
So, Ramit, few of them, I think. We like in consumption. We like the four-wheelers have been a little bit out of favor of late. I think the market, whether it's Tata Motors or Maruti, I have a bit of a contrarian call on Tata Motors. I think the if you see Ashok Leyland, and the market cap is about 35 to 40,000 crore. and Tata probably sells twice the commercial vehicles what Ashok Leyland does. So, and Tata Motors market cap is about 72,000 crores. So I think only on commercial vehicles, I think if you do a sum of part valuation, it doesn't work unfortunately in these markets. Is it should be there. So more importantly, we see a good turnaround in the JLR starting 2019. There are a couple of very good models, which has been launched. So Jaguar I-Pace, which is the electric car version, has been getting very good reviews. We also expect some recovery in UK and other markets. The passenger cars, I think there is a big turnaround happening under the new leadership. They had their huge concerns on distribution network, dealer network. I think that's getting the act together, and it gives you a lot of. I know it's been giving value comfort for a while now, but I think that's one play. Something on the fast-moving electrical goods. See a huge play there as well.
Just one more question on Tata Motors, since you mentioned, a lot of the analysts, obviously majority of them have been bullish on it, and now they've started to say that JLR business is coming for free. So if 260 rupees is the current price, I would describe it to domestic operations of Tata Motors. How much value is the street ascribing to the JLR operations, where the expectation is that it'll start contributing?
I think very difficult to put numbers right now, but you just need one steady quarter. One quarter where you don't see a big degrowth. We've been seeing 6 to 8% volume decline in JLR numbers. There have been forex losses as well. So I think you need one stable quarter, and as we clearly say, I think this stock offers some margin of safety as well, considering at the levels we are at. So my sense is that I don't want to give any price levels, but this is something which can really multiply quickly with just one stable quarter coming.
Well, I think people have been, to be fair, I think people have been hoping for these numbers to bounce back for a while. It hasn't happened. I think Gurmeet's point though is well taken, that when there is a good quarter and it's followed by reasonably decent commentary, then the risk reward is certainly in somebody's favor when you're looking at Tata Motors. Wondering though, from a trade perspective, Amar Singh, would you look at Tata Motors at all?
Yeah, looking at Tata Motors, what we are seeing is that the stock definitely continues to be in a downtrend. That's the reason even when the stock bounced back from almost 240 levels to 270, and then it's currently trading around 266, but the intensity of the fall has definitely declined. And also if you look at the stock from a long-term, very long-term perspective, I'm talking about yearly charts, somewhere around 240, 245, that's a very strong resistance zone, and it's very unlikely that it's going to breach that level. So that's the reason we are seeing some accumulation happening in the stock, and also a fair bit of bullish divergence is being witnessed on the weekly chart. So that clearly reflects that there is some respite for the stock, but still I would say that the long-term charts, the monthly charts, they clearly show that there is going to be pressure the moment the stock bounces back, and that level again I would say is around 290, 300 levels. So the stock is likely to trade range bound and consolidate.
Okay, so that's Tata Motors. Now, the stock that we were just discussing a minute ago was J Kumar Infra. Gurmeet, Chadha, do you track J Kumar Infra?
We do we track the entire, the players in the EPC and the road construction place, and J Kumar is one of the quality names. So of late, there have been a lot of good order wins also. They have won almost close to 1,600 crores of orders in August itself. The largest one being the Pune Metro, almost 400 crores if my memory is right, and another about 180 odd from Lucknow, the UP CNN, which is the medical center there. So I think there have been, good part is these are small order, the size is executable. And as I said, there is a renewed interest in this space. Last year, politically, roads construction has anyways been very well executed. They've been building very good roads. So J Kumar, Dilip Buildcon, I think the entire sector to me from a near-term perspective looks reasonably attractive.
Okay, so that's a bullish view coming in on Amar, whereas Dilip Bilkon in today's session has seen some bit of beating. Before I move to chart of the day, just want to point, Infosys has hit all-time high in today's trading session. Remember, yesterday in the second half, Infi was building up some bit of momentum. The stock was up nearly 2% yesterday, and today 1% more gains coming about. So it's hit its all-time high levels. Let's move on and talk about chart of the day. While the upside in Nifty has been limited to few stocks, moreover, analysts believe that these stocks are likely to head even higher. Let's get an Agam Vakil for the analysis. Agam, over to you.
Well, Navneet, the Nifty is trading at lifetime highs, and it is also advanced by as much as 11.5% through the course of this year. That is on a year-to-date basis. And 18 of the 50 stocks on the Nifty have not only carried the Nifty higher to the lifetime highs, but they've also outperformed the Nifty. And among these 18 stocks, so we have a handful of them which have actually see more of a upside potential even from current market levels. And some of these include the likes of HDFC Bank, where they have a return potential of a further upside of 18%, Yes Bank 15%, something like a Coal India or HDFC Limited too, offering well over 13%, or IndusInd Bank as well, offering a 10% return potential after the kind of rally that we've seen. So the real question now remains is whether or not these stocks can carry the Nifty even higher from these levels. That's a question that remains to be answered, but that's your chart of the day today.
Well, interesting. And, you know, all the names, save for Coal India, private financial names, heavyweights in their own right, all four of them. Agam, that's an interesting list. Thanks so much for putting this into perspective. Gurmeet, it's an interesting one that Agam has just brought out for us, that the upside potential on the outperformers still includes 4 banking names. One would have thought that financials have already had a great rally, maybe time to churn out, but if brokerages are to be believed, then the HDFC Twins, IndusInd Bank, Yes Bank, amongst the names which provide the opportunity for the largest upside.
I think clearly HDFC Twins. I think, and jokingly we've been discussing that whenever there is a top level exit, it's always a great time to add some of these names at the top, whether it was Vishal Sikka for Infi, or it has been Paresh Sutankar for HDFC. And also I think the last quarter we saw upfront provisioning on the MTM losses. There were a few more slippages. So I am extremely positive. As I said, we discussed that the banks under the list of which can do incremental lending. We've been seeing players like HDFC, IndusInd and Kotak grabbing a lot of big deals. So Oil India, for example, never banked with any PSU until last year. And now its consortium has a couple of private banks, including HDFC. Another name which I am extremely positive on is ICICI Bank. I think it gives you at 1.2 book value a lot of comfort. The gross slippages have been the lowest for some time. If you see the NCLT list, the tier 1 coverage is almost 90, tier 2 coverage is in around 60, so the overall coverage is around plus 70%. And more importantly, I see more transparency in disclosures, and I think they have a great retail book. It's again, so coming back to the same thing, one quarter where you have minimal losses, and I think you will see already it's run up from the lows quite a bit. So I think corporate lenders, which includes ICICI, SBI, to me, will see the movement more than the expensive ones.
Well, the stock's also seen some momentum in the last few trading sessions, at least in the month of August, so to say. Some important flashes there on your screen are being attributed to government official. LIC board to meet on September 4th on IDBI open offer, where LIC board will be deciding on buying the rest of 36% stake in IDBI Bank. Remember, at the start of the show, we just discussed the story where currently LIC is only looking to take up the stake to 14.9, which is permitted by IRDA, and the remaining 36% they will be deciding in the board meeting, which takes place on September 4th. Gurmeet, have you been tracking this development with regard to LIC wanting to become the promoter and foraying into the banking space of IDBI Bank? And also, if you could tell us, you've just spoken about HDFC Twins and how you like ICICI Bank too in terms of valuation. Anything on the PSU side where value can be seen if one were to take a longer term call?
I think clearly SBI, I think, I'm seeing, as I said, renewed focus on retail lending. I think they will make some serious dent in the housing finance space to a lot of players. The third party business is growing at a mind-boggling pace. Recently I was visiting Himachal and I saw SBI branch in Mandi, doing more business. So their mutual fund arm there is now bigger than the bank balance sheet in Mandi. So I think their third party income, which basically is insurance and mutual fund and investment products, I think will probably multiply at multiples, could be 3x, 4x from a year from now. And as I said, I see the worst is over in terms of slippages, in terms of further skeletons coming out. So very, very positive on SBI.
Okay, stay on, gentlemen. So much more to talk about. Let's slip into a break. Before we slip into that break, though, here are Dilip Piramal of VIP Industries on the company's operating performance and how does a weaker currency impact the business.
See, our overall EBITDA is only in the region of, it varies between 12 to 18%. And so that is not very large. I mean, if we have something like 40% or even 30%, it would be more easy to predict this. But when your overall maximum margins are about 16-17%, then even 2 or 3% makes a big difference both ways. When your volumes go up, then they can increase also. So I think we should be in this similar margin band. We should continue.
Okay.
Because sales growth is very good. So once sales growth is good, we can take care of the other increasing costs, etc.
Interesting. In the opening remarks, you mentioned about how the sector at large is growing at the expense of the unorganized sector. But channel checks also seem to suggest that you are gaining market share from your competitors too, Samsonite as well as American Tourister. So how is the market share scenario shaping up? How different it is from what it was maybe 12 months or 18 months or 24 months ago?
Maybe we have gained a few percentage points, maybe 2 or 3 percentage points. But in fact, I think the maximum, our other competitor is also doing quite well. So it's not that we have taken too much from the unorganized sector. I also feel that the overall market size has increased. You see, what happens is when the economy grows, and with this sort of growth, a lot of consumers move from the unorganized sector to the organized sector, that is from unbranded to branded goods. But the overall market also increases, so the penetration increases. So even the unorganized sector must be doing quite well. And people who have so far not been consumers of luggage would be entering. And that is how the market sort of pans out. In a growing economy today, our penetration, I think, wouldn't be more than 25 to 30%. So that will increase, and the beginning is always in the unorganized sector. Whenever any product can be made both by the organized sector and the unorganized sector, this is the case. There are two separate market segments, two broad market segments, and one doesn't really impinge on the other, except at the very low price points. But I don't think, I think both the sectors are quite independent of each other.
Would the same be true for backpacks as well, Mr. Piramal, for the sector I'm asking? Because that is essentially a lower price point, but is the organized sector seeing robust growth there?
Yes, yes. Yes, absolutely. I think in fact that is where we have probably gained the maximum, because you see, the smaller the item, the more it is amenable for the unorganized sector. But because our brands are so strong, particularly in backpacks, our Skybags brand is absolutely amazing. And our campaign with Varun Dhawan has really been doing extremely well for the last 3 years. And we continue to come out with very good products. So in fact, that is where one of the bigger drivers of our growth.
Interesting. My final question, Mr. Piramal, is on the currency, and how does this rupee depreciation impact you as a company?
See, we got to realize that the rupee depreciation is not so much a rupee depreciation as the strength of the dollar. And that strength is also reflected in, let's say, the Chinese yuan. So the Chinese currency also has depreciated. So to that extent, and when we buy from China, we try and take advantage of that you are also getting more money for the dollar. So we try and see, and because of our strength of buying, we are the second largest buyer in China of luggage. So, and we have been the only company which has been constantly increasing our volumes in the last 8-9 years. You should remember that when the consumer crisis took place in 2009, the Western economies were really doing badly. And for many years, they were not, there was a recession there. So we were the main buyers, and we are very, in fact, our sales, our purchases from China going up year by year. Our rate of growth is also very good. So we have a very strong commanding position as a buyer. So we are able to contain the costs better than our competition.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you, when you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
Kerala is tiding over the worst calamity that the state faced in a century. The intensity of the calamity and the losses suffered thereby are unparalleled. A preliminary assessment pegs the loss at around of rupees 20,000 crores. It is a humongous task to undertake various tasks of rehabilitation and reconstruction. Only with the wholehearted support and cooperation of all of you, we can rebuild Kerala. Your contribution, however small, will go a long way in achieving this goal. Please contribute to the Chief Minister's Disaster Relief Fund. We shall overcome.
Welcome back. You're still on Countdown right here on Bloomberg Quint. 27.5 minutes go for the markets to shut shop. We have slipped. Okay, no, we haven't. We've actually done reasonably well on the Sensex. There was just a flash move there, but doing reasonably okay for our markets. The world market should come up on your screen. Bring up what's happening to FTSE CAC DAX and just see what those markets are up to. Well, some bit of green on the screen. So the going seems to be okay for the time being. Before we get back to our technical experts, it's time to get in or take stock of the Fab 4 stocks of the day. Let's find out what's made it to Yash Upadhyay's list for today. Yash, good afternoon.
Good afternoon, Neeraj. So, well, it's a very good Fab 4 list today, a very diverse one at that. We start off with Dixon Technologies, and that one's gained about 5% today after brokerage firm Elara Capital came out with a report initiating coverage on it. Now, they have assigned a buy rating and have set a target price of 3,475 rupees, which indicates a potential upside in excess of 24% even from the current levels. Now, a higher operating leverage, better product mix, and a backward integration are all key positives for the company, as they expect their top line and bottom line to grow at a CAGR of 18% and 36% respectively over FY18 to FY21. Vipul Limited is up about 6% today, reacting positively to a big order win after the company said that it has received a works order from the UP government for the operation and management of the Agra-Lucknow Expressway. JBF Industries is locked in an upper circuit of 5% today after the board of directors of the company approved its debt restructuring plan. Now, as part of it, the company would be selling out the entire 100% stake in its subsidiary JBF Petrochemicals to private equity firm KKR, and that would take out as much as $464 million of debt from its books, which is a big positive. But an even big relief coming in for Nesco. That one's gained more than 5% intraday after the company came out with a clarification that it has received all the relevant approvals from the regulatory authorities to conduct its exhibitions at the Goregaon ground. Back to you.
Okay, Yash, thanks for bringing those Fab 4 stocks of the day. But there are some divergent moves that we were mentioning in the tire stocks, where Balkrishna Industries is headed to its lifetime high levels. You've also got something like Apollo Tyres, which is corrected very sharply in today's trade. Balkrishna now up almost 5% in trade, and there you go, Apollo just about a day's low level or mildly above that, down about 3.5%. Sacchitanand, on the charts for both these stocks, where would you go ahead and take? Obviously, Balkrishna charts are looking much better, but in terms of taking a fresh trade, which one is looking better?
Well, from a buying perspective, I think Balkrishna still stands out. In fact, the way it has reacted from its breakout zone of around 1350, we saw an initial breakout and a pullback, and again it is resuming up. So probably the stock still has a good amount of headroom left. 1470-75 could be a probable target in the offing. On the lower side, I think the base at around 1360 now is a very strong support. So I think from a fresh trading perspective, on the long side, Balkrishna is still sweeter. When we look at Apollo, it has actually broken down below a very important juncture. 260 had been a very strong support for the counter, and the way it has slipped, we may see it dragging further towards the 246, 245 levels, where its previous swing support was placed. So I think on the long side, one can go with Balkrishna Industries, but on the short side, I think Apollo Tyres, unless it does not recoup about 260, I think the selling pressure may continue.
Okay, selling pressure may continue on Apollo Tyres, currently down almost 3.5% in trade. Gurmeet, you also have a pick on something like CDSL. What's the rationale to have a bullish view on a company like CDSL?
Very niche play in financial services. It's the second largest depository participant. This business, and relatively dominant, the ownership is by Bombay Stock Exchange and leading banks including HDFC, SBI and others. 1/3 of the revenue is basically annuity, which is the annual charge they have on the demat services which they offer. There is a NSE SEBI deadline to get shares dematted this year, which we are seeing a huge surge in number of demat accounts being opened. They've also launched 2 more depository services, which are on insurance and an academic depository. And I think they've changed their cost model, which is leading to grabbing market share from the leader, which is NSDL. So they have lowered the upfront fee. There's a lower fee involved, which is the annual charge, and there's some good spend on technology. So niche play, virtual, monopoly. I would not say monopoly, since there are 2 players, and supported by the structural tailwinds and headwinds in the financial services space.
Interesting. Okay. CDSL, I think the IPO generated a fair bit of excitement too, and Gurmeet Chadha likes it at the current levels as well. Okay, we just need to get back for a brief moment onto the LIC IDBI Bank deal. The Delhi High Court has sought the minutes of the LIC board meeting where the life insurer decided to hike stake in the debt trap bank. The court has also asked LIC not to proceed with an investment in IDBI Bank till at least the next hearing on August 30th. Upmanyu Trivedi of Bloomberg News, who was in the courtroom, joins us now with the details. Upmanyu, do fill us in.
Yeah, that side, the court was actually inclined to give a status quo order to LIC to not proceed with the investment, but on insistence of LIC's lawyer, court took an assurance and an undertaking from LIC that it will not proceed with the deal till August 30th. And by then, LIC will have to explain a volley of questions that the court hurled at it. The court basically wants LIC lawyer to explain that how LIC investors are going to benefit out of this deal, and what were the provisions of law under which special exemptions were given to LIC from the rule that allows only 15%, that has a cap of 15% for investment, for an insurer's investment in a bank. So LIC will have to prove that those exemptions were in fact in procedure with law and to the benefit of its investor. So the next date, August 30, will be crucial.
So now the activity shifts on August 30th, I would presume, Upmanyu.
Yes.
Okay, great. Thanks so much for getting us that quick update, Upmanyu Trivedi from Bloomberg News, filling us in. August 30th remains a key date as well. Okay, some more stocks. Then we'll get in what the stocks coming into the ban or out of the ban might be looking like. But I'm looking at the list of stocks trading at new highs. Amar, an interesting name for the last few days has been Suven Life Science. Has gained more often than not in the last few days, up about 6% in today's session, nudging new highs. Do you track this one, or can you pull up the charts and look it up for me?
Yeah, looking at this particular stock, if we look at this has been definitely the trend is positive for the stock, and the trend has been up. If you look at the long-term charts, that also clearly shows the stock was in consolidation. If you look at the stock, it was in consolidation and was unable to breach the 240 levels. So that was breached decisively on 21st August, and since that the stock has rallied sharply. And if you look at the stock from a long-term perspective, then in the I would say in the June quarter of 2015, it had made a high of 329, 330. So effectively, it means is that the stock has got upside potential, and initially it would have to breach the December 2015 quarter high of 301, 302. So ideally, that would be a level of resistance. If that is taken out, then the stock is likely to touch its earlier high of 329 levels.
Sacchitanand, we don't often give it credit, but Axis Bank has had a phenomenal run the last few weeks. At 662 or 663, it's packing a serious punch, trading at fresh 52-week highs, a bit of a bump up in the last few minutes of trade. Is there a trade here in Axis?
Well, I think the writers are getting more confident. In fact, if you look at even today's data, I think 650 strike has been written very aggressively. So I think there is still, they are confident, and I think 700, 695 levels could be in the offing. I think one can play this move from momentum perspective now, keeping a stop loss on a closing basis below say 640 and expecting an extension towards the 695.
Okay, Axis Bank 1.5% higher in trade, and finally moves seen from Adani Ports, which was just about trading flattish half an hour back. That counter is up almost 2%. It is featuring among the top three gainers now in Nifty, up 2%, and GAIL has seen a very sharp fall, I guess, in the last half an hour of trade. That's down 5% at day's low right now. Amar, on the charts, GAIL and Adani Enterprises, the kind of move that we've seen in the last half an hour, would you take any bet?
I would say that looking at Adani Ports, what we are seeing is that the stock has been consolidating, because on the downside, if you look at it, 365, 370, whereas on the upside around 390, 395, 400 levels. So I would say the stock definitely seems to be capped on the upside. Until the time the stock doesn't take out the 400 mark, I would say the stock is likely to consolidate. Talking about GAIL, what we are witnessing in GAIL in particular is that this stock has been on the sell mode. And over the last couple of days, it has been witnessing selling pressure, and today has been extreme sharp selling. Also, what we are seeing in this particular counter is that on the upside, it's capped around 390, again 400 levels. And if you look at it technically, also on the daily charts, it was clearly reflecting that the momentum on the upside that has definitely waned off, and the stock is likely to witness selling pressure. However, if we look at the downside, I would say 350, 360, that is an immediate level of support for the stock. So we'll have to watch out for that because the weekly charts are clearly, I would say they are still, I would say the trend being positive there. So I would say that the stock could witness some pullback from 350, 360 levels. So we'll have to watch out for that support level.
And we will do that. Stay on, Jamin. Time now to get in a couple of in-house pieces. Firstly, a list of stocks that could be entering or coming out of the ban. Then from the top chatter from the dealing rooms as well. Navneet, let's start off with you first though. What's the list looking like?
Just one stock, Neeraj. Since it's the expiry week, I'm not going to look at the stocks which can enter. So just Hexaware, watch out for that one. As yesterday, the total open interest was very close to that mark of 80%. Remember, for a stock to come out of the F&O ban, it has to fall. The open interest has to fall below 80%. And the stock, I guess, has been reacting negatively. It was down almost 16% the day it entered into the F&O ban. So watch out for that one. Highly likely that it could come out, considering the unwinding, Neeraj, that has been seen on the option side of the data.
Okay, we will watch out for Hexaware. Thanks for that, Navneet. Let's also try and figure out what our dealing rooms recommending in the session today. Jatin Mota and Darshan Mehta here with their channel checks. Gentlemen, both of you, good afternoon. Darshan, let's start off with you first.
Yeah, so Ujjivan is one of the stocks that's been doing well in today's trade. It's up almost, it's not done much, but I think Equitas was the one that did well. But Ujjivan is something that dealers are talking about today. There's a buzz of a potential corporate announcement that could come in on the counter, so that's what we're watching out for. Decent volume, 1.6 million shares already traded. Maruti's surprising move that's come in. It's up almost 200 rupees. Over the weekend, it will report its August sales numbers. The estimate is close to 1.6 to 1.7 lakh units. The buzz in the market that we are hearing is that Maruti may well report in sales in excess of 1.8 lakh units in the month. So Maruti on that back is doing well in trade. And the final stock that's been spoken about, and that is GSFC. It did well. It opened up rather strong post all the news in terms of the fertilizer company. But even at lower levels, some of the HNIs are actively accumulating. Even if you're looking at technically, the counter looking extremely strong is what a couple of dealing rooms had indicated to me. But Yatin, what are you hearing?
Darshan, Yes Bank, that is one stock wherein there is a lot of speculation regarding extension of Mr. Rana Kapoor's tenure as MD and CEO. Of course, this is all speculation. The RBI approval is still awaited, and dealers are hopeful that this should come in a day or two. Dealers are recommending buying call options, for the expiry as well as for the September series. Probably a 370 call or a 380 strike call is something that dealers are looking at. Stock down 3.5%. Clearly on the market speculation. Nothing confirmed yet, but of course this is one stock wherein dealers are positive on. Godrej Consumer also, based on F&O trends, dealers are recommending a buy today, sell tomorrow kind of a strategy, which is BTST. And in the cash segment, Jagran Prakashan, that is one stock from the media space wherein dealers are indicated that there are a lot of HNIs which are interested to buy the stock at lower levels. So this is one stock wherein dealers are expecting some short-term momentum on the positive side.
Interesting. Thanks for that, Yatin and Darshan. Well, some interesting names out there. Gurmeet, before we thank you, any thoughts on either an Ujjivan financial services? I think we spoke about Equitas, but maybe Ujjivan, if you have some thoughts there. Or secondly, I've not heard too many people speak about Jagran Prakashan or too many media stocks of late. What's your view here?
So, I'm a little, cautious on some of the NBFC names. I have a strong feeling with the way the PSU banks are gearing up their retail lending portion. A lot of this business will get commoditized. The yields are hardening. That would also put pressure on NIMs. And I'm not too comfortable with the liability profile some of these NBFCs have. Unlike a stronger NBFC, which Bajaj Finance still has a 10% margin, I think the margins will be under pressure. and you ran a story with Bandhan Bank being the most expensive. So I think I think the valuations are not comforting in some of these names. On media stocks, as I said, it's very cyclical. We don't do too much media stock. Positive on Z. That's one stock we've been positive on. The other one we have been, in this space, we've been positive on, which is not really media as such, but is PVR. So these are the two ideas positive on that space.
Okay, Gurmeet, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the markets and the pockets in the stocks which you like currently at these levels. Okay, Bank Nifty has recovered most of its losses. The index is right now currently trading flat, just about gains of 13 to 14 points seen there. But remember, in the morning when it opened, the opening was somewhere about 28,380 thereabouts. So still from the opening levels, it's down, but clearly it's off the day's low. So some bit of recovery seen on that front, but just let's do a check on Equitas holdings. I'm not too sure if we did that, but before that I just want to pull up Jet Airways. There's a very, very sharp move, I guess, that has come in Jet Airways just in the last 5 minutes of trade. It's up 5.5% right now, and if I'm not mistaken, this one too is in the F&O ban. I don't know if there is any sort of short covering or unwinding of position that's being taken place, but very quickly, Amar, the sort of move that we've seen of 5% on Jet 297, what do you make of it?
Yeah, I would say that Jet definitely is witnessing consolidation, and also on the downside we've seen the stock bottoming out, and there's also bullish divergence on the short-term charts. So that's the reason we are seeing this pullback in Jet Airways. On the upside, I would say 305, 310, that should act as an immediate level of resistance.
Okay, interesting move there though, as Gurmeet said, on Jet Airways. But let's try and figure out what are the top closing strategies from our experts today. We'll also take a view on Reliance after that. But first, a closing strategy. Sacchitanand, to you first, your top closing strategy.
Well, HDFC Banks looks very interesting from a BTST perspective. If you look at the overall structure, and the stock has been lingering lower, but if you look recently, it recovered from a falling wedge channel pattern, and it has recovered really well. 2100 is the OI level, wherein there's around 9.5 lakhs shares concession, and I think the way it has been responding towards that level, I think we may see a OI breakout soon. The stock may head towards a 2120, 2130 kind of a zone. I think trading longs can be initiated right now. Stop loss should be placed at around 2078.
Okay, that's a buy call on HDFC. Amar, what about you, your closing strategy?
I would say that one can look at Kotak Mahindra Bank, because this is one stock, if you look at the market, is hitting record highs, but this has been just lagging behind. So now it seems that the stock has definitely formed a support, and 1240, 1250, that's a very strong support zone. Currently it's around 1286. So one can look at buying around 1275, 1280. That's a good level to buy, with a stop loss below 1240 and a target of 1350 on the upside.
Amar, I was just looking at the charts of Kotak Bank. It's not broken the 100-day moving average, at least in the last 1 year, possibly over 2 years. Currently, too, taking support around those levels. Could that be one of the reasons as well, which could be aiding your call?
I would say that I'm not looking at the 100-day right now, but what I see is that it is witnessing bullish divergence on the charts. So that clearly reflects, and also if you look at it, it's forming a very strong base. So what I see is consistently trading above 1290 levels. It's definitely going to rally towards 1340, 1350 levels. So it can be a good buying opportunity.
Interesting. I mean, the other one that is doing reasonably okay today is Piramal Enterprises. 3106, up about 1.5%. Has had a good move in the last 3 or 4 sessions. Yeah. And I think in one of the investor conferences, Ajay Piramal is believed to have said that there is a long-term vision of de-merging the businesses. Now, it was always believed that it will happen, never quite acknowledged openly. And it's happened. 2 large businesses, or maybe 3 businesses, but 2 large ones. Value creation, if indeed financials and pharma are separated, maybe that's what's driven the stock. Up about 1.5%, 3,100. I think fresh highs today.
It was up last 2 sessions also. We've seen some significant gains coming in for Piramal Enterprises. And clearly, Neeraj, there's no stopping for stocks like Bata India. That's
the other one, yes.
Fresh highs once again. Page Industries also going up. And VIP also touched. I think there was some profit booking for VIP from the higher levels today. Currently, it's down almost 2 to 2.5%. But in the morning session, it did touch its fresh highs. Sacchitanand, would you use this opportunity, the dip that we've seen in VIP from the highs, to buy into it?
Well, actually, the stock is quoting at its life highs, and if you look at the entire structure from a trend perspective, I think so far as 588 is not breached on a closing basis, I think the structure could remain well. But if you look at the developing divergence, that is indicating that the stock may just consolidate a bit. So probably somewhere close to 600 would be a good idea to accumulate the stock. Not right now. Keeping a stop loss on a closing basis below 588. One can initiate, but not at this point of time. Probably some more decline, and 600 could be a decent level for any trading longs.
Okay, 600 could be a better level to enter, to make a fresh entry into something like VIP Industries. Amar, Hindalco now the top gainer on Nifty, up 4% at 239 or 240 thereabouts. Would you take a trade on the upside? It's at day's high.
Yeah, I would say that looking at the metal stocks, what we are witnessing in Hindalco, that Hindalco has definitely bounced back, and also the metals have also witnessed a staged recovery. So yes, Hindalco can be a buying. I would say any pullback can be used as a buying opportunity. Ideally, the stop loss needs to be below 231 levels, and on the upside, if you look at it technically, around 250 could be a probable target.
Interesting. Okay. What else? There is strength in Store One retail today, but Reliance Industries 2.5%, 1322 and counting. What a big mover this has been, supporting almost every single day in today's session too. With this move, trading at fresh life highs for itself. How much more in store, Sacchitanand, for Reliance?
Well, I think the way we are looking at the counter, I think it really looks overstretched. In fact, the way it has been performing. But there are no signs of any exhaustion yet. So probably if someone is holding from a trading perspective, I think one can maintain a trading stop loss strategy for this particular counter. 1280 would be a significant level where the stop losses can be placed now. It is a 7-day streak, wherein the stock has really not seen any declines, and it has been forming higher closing along with a higher bottom. So probably the steam is still there in the counter, but since it is very much overstretched, a trading stop loss strategy could be apt. From a target perspective, most of the pattern targets have been achieved. So probably it is in a new zone wherein one should wait for some consolidation for any further upticks. So I think keeping a trailing stop strategy would be prudent from here on.
Okay, some gains coming back actually. 11,742. Nifty is now up actually 50 points in trade. Amar, Adani Enterprises, we were discussing Adani Group stocks, the one which is in the F&O market, Adani Enterprises and Power, but just wanted to take your view on Enterprises, considering it is it's also touched its 52-week high in today's session. What do you make of the move? Because I guess in the last 2 months we've seen the stock bottoming out, and the sharp increase that one has seen in the stock clearly goes to show that there were a lot of long positions that were being built up here.
Yeah, I would say that Adani, if you look at Adani, be the weekly charts or the monthly charts, it was clearly reflecting that there is buying interest in this stock, and I would say in the weekly charts, the trend has been very strong. However, what we've been seeing on the daily charts is that after a significant rally from almost 100 levels to 204, the stock went in for some consolidation, and from 25th of June till yesterday, the stock was more or less consolidating, but it has breached that level. So it becomes very important and crucial whether the stock is able to consistently sustain above 235 levels or so. If that is the case, then the stock is headed higher. Because if you look at the stock, then the stock could head higher towards 250-55 levels. Technically, yes, it is strong on the charts.
Okay, Adani Enterprises looking strong on the charts, and we highlighted Jet Airways for you. The stock's seen some more gains in the last 10 minutes right now. Currently, it's crossed the 300 mark in trade, 302, 7% higher for Jet Airways. But just under 3 minutes to go for markets to close. Let's head across to Neeraj to find out how exactly today's closing is panning out. Neeraj, once again, fresh highs seen for all the key indices. In fact, Bank Nifty also saw fresh highs in today's session, but not bad at all. Expiry week so far has been good. We're seeing almost 40 to 45 point gains in Nifty.
Yeah, and in fact, it's been the last half an hour has been the one of recovery, because the Nifty Bank too has clawed its way back almost into the green right now, but very flat. However, has clawed its way back completely. We're ending it almost at the day's highs for the Nifty and the Sensex too, for the Sensex for sure. And for the mid caps and the small caps, the small caps haven't done too poorly today, flattish. Mid caps may have been down about a third of 4%. So the broader market's actually coming off a little bit. Nifty Bank rising a little bit. It's been volatile the last 45 minutes of trade. Let me talk about the large caps, and Nandit will bring you up to speed with what the mid caps and the small caps and the broader market liquid stocks are doing. The winners, Hindalco, strong 4% up move there. Very big move. We were talking about how Adani Port was missing from the list of stocks with action. Well, it's now the second highest gainer on the index. Reliance follows suit. There's strength in Vedanta, clearly showing the commodity rally, because Tata Steel too is up about 1.5% right here, doing well for itself. HDFC piles on the gains. So second best contributor, I would reckon, on the index today, and some gains for an Axis Bank. Kotak Bank is missing from this list, but marginally in the green. What's gone down? GAIL down about 4.5%. Yes Bank about 3.5% down in the session today, and HPCL is looking slightly wobbly too in trade, but it's a mix. No big trends here in the losing space as well in trade. But the broader of the spectrum, Navneet, NBFCs, fertilizer companies, select specialty chemicals, lots of groups doing the rounds today.
That's right, Neeraj. Fertilizer stocks were up and about in today's trading session, but overall, if you look at the broader markets, I think the breadth was even. Steven, let me start off with a couple of gainers. Firstly, with the Adani Group stocks. Adani Transmission, after being locked in upper circuit yesterday with gains of 20%, was up another 10 to 12%, and that's Adani Enterprises, by the way, on the screen, up 8%. Transmission closing with gains of nearly 12%. Universal Cables from the broader market arena was up and about. That stock also saw some bit of buying momentum in today's trade, 12% higher for this one. And Equitas Holding, that was one of the top F&O gainers also for the day. Some traction seen for this one, 5.5% gains. And Balkrishna Industries was up right from the word go, I believe, in the morning, and it kept on building gains. So that was a very good, chart I can see on the screen right now, 5%, and also closing at day's high. Some long positions seen for this one. It's also inching very closer to its all-time high levels. From the fertilizer pact, you have stocks like Fact and Chambal Fertilizer, just highlighting two of them, but the entire pack saw good gains. So Fact was up 12%, and also something like Chambal Fertilizer, that was up 5.5% in trade. And Berger Paints from the paint sector touched its fresh highs in today's trade, 3.5% higher for this one. On the losing side, as I said, market breadth was even, Steven. So where there were gainers, you had losers too. DB Corp was down. There was selling pressure seen for this counter, closing also at almost day's low. You had ILNFS Transportation, a counter which touched its 52-week low today, down almost 5% in trade. PFC, RSC were up and about yesterday. Profit booking seen in today's trading session. Both the stocks were down. And also from the PSU banking lot, you had stocks like Bank of Baroda, Union Bank, both of them saw cuts. And finally, something like Apollo Tyres, where Balkrishna Industries has been inching higher. There was some aggressive selling pressure seen for Apollo Tyres. Remember, the company had yesterday highlighted they're looking for an investment of almost $1 billion to overtake MRF, Neeraj.
Well, all in all, an interesting day of trade and a last half an hour of recovery. The Sensex closing in at the highest point of the day, 0.52, at least the highest point in the last 3 hours for sure, and the Nifty Bank clawing its way back into the green. Interesting trends there. And the market breadth, though, I think would have gone off a little bit, Navneet, because the mid caps and the small, yes, it did go down a little bit. The mid caps and the small caps corrected a little bit in the last 45 minutes of trade.
That's right. That's what I was mentioning. If there were gainers in the broader markets, you also had losers. I guess the Nifty 500 index would have given a better picture of this one. But let's pull up the participation and check what sort of turnover was recorded. Definitely the NSE F&O turnover for the week now, it's closer to 10 lakh shares, and it'll keep building up till the expiry day. And cash is back above the mark of 30,000. So good participation seen of over 10 lakh crores in today's trade.
The contributors would have Reliance yet again, would have HDFC maybe on the gaining side, and on the losing side, yes, those two are the top two, and HDFC Bank then. Interestingly, Maruti Suzuki after a while, Navneet makes an appearance.
Yeah, but can't take my eyes off Reliance Industries every day, we say. I think almost 50% of today's gains are coming from there.
Yeah, that's, well, fairly interesting. And on the losing side, not too many really. Mixed bag. FMCG may be a bit of a stick, but Yes Bank really the principal mover, and ahead of that deadline looming for the appointment is certainly under a little bit of pressure in the session today as well as also the last few days.
Yes, that's the contributors list for today's session, but 2 more days to go for the August series to expire, which so far has been good. We've seen Nifty gaining almost 5 to 5.5, Bank Nifty also up 3.5. How should one position then in the next 2 sessions? Let's first check with Sacchitanand and get his thoughts. Sacchitanand, what sort of positioning would you take on Nifty and Bank Nifty tomorrow?
Well, as we discussed, Nifty, we are really not comfortable taking any long positions. Primarily if you look at last 15 trading sessions or so, we have seen 9 trading sessions wherein the market has formed a doji kind of a formation on the daily scale, and that primarily tells us that the strength is not that evident when the market is going up. If you look at Bank Nifty, Bank Nifty in fact looks very interesting from a long perspective. The immediate hurdle for the index, the immediate hurdle for the index is around 28,300, and the way it has been, trading confidently, I think once we have a breach above, say, 28,340 or so, we may see a strong move, towards the 28,600. So probably, trading longs in Bank Nifty would be very comfortable rather than taking any fresh commitments on the Nifty. Keeping a stop loss somewhere close to 21,140 from here on, 28,140 from here on, long positions can be considered in Bank Nifty, but Nifty definitely should be avoided on the long side.
Okay, avoid Nifty in the long side. Amar, what about you? Would you take any fresh bet tomorrow?
I would say that go with the flow. What we are seeing is that the trend definitely remains strong and positive. We've seen up gaps, but still the market sustaining and closing at the highs. So that clearly reflects that there is inherent strength. And also, if you look at the stocks, be the banking stocks, be it Reliance, be it the auto stocks, be it the metal stocks, they are all contributing. So we'll have to look at that from that perspective. So I would say that yes, one definitely needs to trade with caution at these record levels, but any pullback in Nifty can be used as a buying opportunity. So somewhere around, as I said, 11,710, that can be a good level to buy with a stop loss of 11,665 and target of 11,805 on the upside.
We'll leave it at that. Jaman, thank you so much for taking the time out and being with us today. Sacchitanand, Uttekar, as well as Amar Singh, really good of you to take the time out. And viewers, thanks for tuning in as well. It's an interesting day of trade, but heading close to expiry. For now though, from Navneet and me and the team that put this show together, thank you so much for watching.